Welcome to a brand new series, Vantage Point, first of its kind investment talk show in Sri Lanka.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
A review of global and local economic situation, capital markets and selected stocks.
Speakers Chamikara Gunawardena, founder Investor I Private Limited.
Sponsored by Investor I Private Limited. If you are looking for investing through research, don't miss your Vantage Point.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
Right here on Radio Sri Lanka. Welcome to Vantage Point with Chamikara Gunawardena, founder of Investor I Private Limited, Sri Lanka's first independent and bilingual investment research provider. Now today is the second in a new series of programs to create awareness of investment options and to disseminate investment knowledge among the general public, academics, businessmen, and even students studying between O-level and the university. Investor I Private Limited is in the forefront of providing research and knowledge to investors, and we are grateful to Mr. Chamikara Gunawardena for coming forward through the medium of the national radio to share some important facts regarding this subject. Now, remember, I was listening to your last program. A discussion took place with Professor Harindra Dissa Bandara, Director General of the SEC, and the focus there was the importance of an independent investment research to a country like Sri Lanka. And also, there was a little discussion about the myths about investing in the stock market, Mr. Gunawardena. Now, could you, in a nutshell, just summarize what was said so that our listeners will have some idea before we get on to today's subject?
In the last program, we discussed about 5 main myths which are being circulated in the Sri Lanka stock market. One is Sri Lanka stock market does not follow fundamentals. And the second myth is if you want to make money in Sri Lanka stock market, one needs to trade. And another myth, which is quite popular, investment advisors cannot be trusted. And the final myth we discussed in the last program is investors can earn quick money from share tips. So those are the myths we discussed in the last program.
Are these myths very common, Mr. Gunawardena? I mean, are they prevalent?
Absolutely. They are quite common, and it has caused
little bit of problems
for investors.
Right, today our focus is on some important aspects related to the stock market. We're going to deal with Mr. Gunawardena macroeconomic development, sector development, geopolitical development, and the local political development. These are some very important aspects in relation to the stock market. Am I right, Mr. Gunawardena?
Absolutely, Nihal. It is quite unfortunate in Sri Lanka that many investors are not aware about the main factors that is affecting the performance of a stock market.
Now, what do you think is the reason for this? I mean, they are not aware. What is it due to? Many reasons?
Well, the main reason is probably the people, the organizations who are conducting research and analysis on Sri Lanka stock market does not do or does not educate and give the investors, their clients, on how to go about in investing in a stock market. So it is their role to educate their clients and the investors in the country what things to look at when investing in the stock market and what factors affect the performance of the stock market. That is critical, because without knowing what are the factors affecting the capital market in a country, it is like getting into huge risk. Taking a huge risk without knowing where you are getting at.
You think that's happening most of the time? I mean, they are going in without adequate knowledge?
Absolutely. It does happen most of the time in the country.
So how could you challenge this, or how could you avert this situation?
Yeah, this is the whole reason why we wanted to start this program. It's not just this program. That is the whole reason why we established our organization, Investor I, which is the pioneering independent investment research Sri Lanka. Through our organization as well as through this program, we are trying to educate the investor community in the country and the future would-be investors in the country to know and aware about investing in stock market before getting into the stock market. so that they could maximize returns while minimizing risk in investing.
So you're doing a wonderful service, Mr. Gunawardena, Investor I Private Limited, in coming forward and using the national radio as a media to create this awareness, because I can firmly assure you that there are many, many listeners tuned into this program all the time, and so you're going to score a lot of marks. Right, you can continue your discussion about these aspects of macroeconomics.
Yes, Nihal, there are a number of factors affecting a stock market, not just in Sri Lanka, but any stock market in the world. Just like any good or service has a market with demand and supply deciding the prices of that market, shares or stocks also have a market with demand and supply of that market determining the share prices. But there is a fundamental difference between a market for a normal good or service and a market for shares. There are a large number of factors that is influencing a share market, whereas in a good or service market, the factors affecting the market may be limited. So why I say a country like Sri Lanka being a developing country in the world, and in stock market jargon, it is called a frontier market, or you can also call emerging market, with more volatility, unlike in a developed market where there is less volatility. So therefore, as an emerging market, as a frontier market in the world, the factors which need to be considered and looked at in investing in the stock market is vast than when you want to invest in a developed country like US or UK. So let's look at some of the common factors that could affect any stock market, be it developed or emerging market. There are two main categories of aspects. First one, macro aspect, and the second one is the micro aspect. So let's start with the macro aspects. The number one factor that is affecting a stock market are the economic indicators of a country. Since the stock market is part of an economy, economic data and developments naturally tend to affect the stock market. So in most developed countries, the stock market capitalization as a percentage of GDP is close or above 50%. I mean, some are above 100%, whereas in Sri Lanka it is less than 30% at the moment. Even in developing countries like China, India and Indonesia, the stock market capitalization as a percentage of GDP, which is the main indicator of how to measure how developed a country's stock market, in those countries also around 50%. So in Sri Lanka's capital market, there are about 287 companies listed, among those listed companies, there are large corporates such as Sri Lanka Telecom, Dialog, Hayleys, John Keells Holdings, Commercial Bank, HNB, etc. are listed. But there are again big ones such as Akbar Brothers, Mars Holdings, Ceylon Biscuits and Maliban, which are not listed in the stock market. So let's look at the main economic indicator.
Now, before we get on to that, Mr. Gunawardena, you were saying something about this GDP growth. It's very important, is it? That particular factor,
yeah,
GDP growth.
The GDP growth is one of the key economic data that investors should look at. GDP is basically the amount of goods and services that is being produced in a country during a specific period. So usually stock market tends to move with the GDP growth rate. So
is it kind of interrelated?
It is interrelated. It is interrelated depending on how big and how capitalized the stock market is in a country. So in Sri Lanka, it is about 30%. It is fairly capitalized. So it is in the developing path. So if the economy of a country or GDP growth rate is doing well, if the GDP growth rate is moving up, that means that is also likely to help the stock market to move up. So when someone says the economy of a country is doing well, I mean, it naturally means all the businesses in that economy are doing well. So be it government, non-government, small, medium or large, or formal or informal business, all of them tend to perform well in a developing in an economy that has high growth rate.
As at that point, Mr. Gunawardena, there is no problem there, because we have seen recently a rapid expansion of the Sri Lankan economy, and this may be a real indicator for a large number of new and wide opportunities for investors to come in. It's rapid expansion of our economy.
Absolutely. With the end of war in 2009, there have been number of opportunities open up for new investors, not just for new investors, even the existing investors. So stock market, investing in stock market is one area where the public, even the general public, can get into and earn a reasonable return on their money. So as a prudent investor, it is not just, you should not just look at the GDP number per se. You also need to look at the sustainability of that growth, because if the GDP number in a year is high but it is not going to be sustainable in the mid to long term, it does not reflect well on the sustainability of the economy. So if you look at GDP per se, GDP data are reported every quarter and every year. If those reported GDP figures are above or below the expectation of key stakeholders of economy, then the general investor sentiment also moves along with that.
And it rises.
Absolutely. It could rise. For example, if the reported results are above the expectation of the stakeholder, the sentiment definitely rises. Whereas if the reported results are below the expectation of the stakeholder, investor sentiment is likely to get affected. I mean, a fantastic example is, before the war ended, Sri Lanka economy grew at around 5% for the last 20 to 30 years, whereas the post-war period in 2010 and 2011, Sri Lanka reported GDP growth above 8%. And Sri Lanka stock market also grew in line with that, and Sri Lanka stock market reported on average about 100% growth during those 2 years.
Right, we'll pause there for a moment. Let's have a break for music. Indira Navagamu has signaled me to say, yes, let's have some music in between this discussion. Would you like it?
Absolutely, yes.
Vantage Point, first of its kind investment talk show in Sri Lanka.
Right, after having heard that song, I'm sure you've quite keyed up to continue this discussion about what we're trying to.
Yes, Nia, the next economic indicator which investors need to look at is the unemployment rate. That is another factor in the macroeconomy that is affecting a stock market performance. I mean, if you define what unemployment rate, it is the total labor force unemployed but actively seeking employment in a country. So what happens when unemployment rate declines or rises is that it affects number of other areas in the economy, such as the GDP growth, consumer spending in the country, consumer and investor confidence of the economy, government budget or financing through tax income, etc., etc. So if the unemployment rate reduces on a sustainable basis, it is a clear reflection that the economy is improving and will do well in the future as well. And the next aspect in the macroeconomy for investors look at is the inflation, the rate of inflation. I mean, if you simply put it, inflation is a rise in prices of several items over a period of time. It is basically measured through various indices such as consumer price index and wholesale price index. So these indices are used for measuring inflation, comprising of several items having different weightages, and hence these indices move according to the price changes in those items.
So what you're saying is that you need to keep a check on the rate of inflation.
Absolutely. It has a major impact on the stock market because a government is likely to definitely wants to contain the inflation rate if it is moving up at a rapid pace. So the main policy instrument the government uses to contain inflation is the interest rates. So when the inflation moves up, a country's government usually raises the interest rates. So this tends to make the debt instruments as well as depositing money in banks attractive for the public and investors relative to equities or investing in stocks, as fixed deposits or savings tend to carry a lower risk. So this results in some amount of investments moving from the stock market to the bank deposits and debt market.
So that's the interest rate you're talking about.
Yes, the rise in interest rates. So it reduces the demand for the instruments in the stock market, thereby reducing the overall price movement. But investors need to keep in mind that high inflation is not always bad, and low inflation need not always be good for equity markets. It all depends on the companies and the sectors in a country. For example, a rise in oil prices will impact a wide range of items from food products to those that require transportation. And a less price sensitive product like oil will help those oil companies to pass on their cost, whereas food producing organizations may not be able to pass on the increasing cost as a result of inflation due to those goods being more price sensitive in nature.
So the rise in oil prices internationally bound to affect in some way the local situation.
Absolutely.
Yes.
I mean, let's get into how companies are affected by rising inflation in a country, and how does an investor look at this rising inflation. Rising prices of several items means that the input prices of production of various goods and services are rising. I mean, in these cases, market analysts and fund managers will always consider the net impact on the margin of the entity that they are tracking. I mean, it is not just looking at the rising cost of production, it has to be considered in the backdrop of companies' ability to pass on the price hikes to the end user, as I just mentioned. For example, if a company is able to sustain its profit margin despite high inflation, the stock price of that company can hold for some time. And if high inflation sustains for a longer period, obviously at some point of time it can lead to a chain reaction across the economy, pushing up interest rates and even affecting demand for many goods and services.
So that's bound to happen.
Well, yes, it does. It does.
Yeah.
Not only that, an increase in interest rate will push up borrowing costs for corporates, and rising interest rates will mean there is less demand for consumer borrowing, and which will in turn hurt the revenue of companies. And again, in return, it is likely to impact the sentiment for the stock market as a whole. And the other important economic indicator that is affecting, or that is which is a strong factor of the performance of a stock market is the interest rates. Yeah. I mean, in layman's terms, if you look at if you define interest rate, it is the rate paid by a borrower of money to the lender of money. But in economic terms, this is a much more deep subject to look at, and it is a monetary policy tool used by the central bank of a country to manage the growth of an economy. Not just economy, the inflation and also in unemployment situation. So what happens when interest rates go up is that consumers, as I mentioned in the inflation topic as well, consumers tend to borrow less and spend less, which will affect the revenue and profits of businesses in the country.
So you have to keep a check on this interest rates rising.
Definitely, yes, Nihal.
You need to have a closer check on that.
Definitely, because interest rates is probably the most important factor investors need to look at and track when making investment decisions, because it drives up and it drives down the stock market when the government decides on the interest rates direction in a country.
Should that be short term or long term? The interest rate, I mean, when an investor looks into investing, I mean, when he looks at the interest rate, needn't be short term, or is it long term?
Well, both
have to be considered.
Both have to be considered, and it is the direction, interest rate direction, which the investors need to be mindful about. So when government makes the policy rate decisions every month, they usually give a direction. So and they also give the reason rate revised up or why they have revised downwards. So you can get some feeling about where the interest rate is heading, looking at those.
You think the investor has a clear idea about where the interest is heading, either it's going up or coming down? Do you think he'll have a fair indication?
Well,
will it be a difficult thing for him to keep a track of that?
Well, if you look at, I mean, the government publishes the policy rate, the repo and reverse repo rates in the central bank,
right,
in the central bank website, and also through the newspapers. So that is one way they could track the interest rates, and also they could track. I mean, if they can contact and come. I mean, if they borrowed or if they have deposited money, they could also see how the deposit rates are moving up and down.
Up and down.
Yeah.
Very crucial. Huh?
Yes. So the rising interest rates affect the stock market in two main ways. Firstly, higher rates make deposits in banks and treasury, of course, which are less riskier than investing in stock market, make those deposits or putting money in those deposits more attractive, and also raise the risk premium for investing in stocks, thereby increasing the overall risk of share investment. So therefore, investors may shift or even reduce their equity portfolio to deposits or debt instruments in a country, thus increasing the demand, thus increasing the supply and decreasing the demand for stocks, leading to lower share prices. Secondly, how the interest rates affect the stock market is the high interest rate increases the financing cost of companies. So if the listed companies have already borrowed heavily on variable interest, this reduces the profits of that company, which in turn leads to lower or no dividends or share prices being hit with that. So those are the main economic factors an investor should look at. But again, in developed countries, there are other key economic data like consumer confidence index, purchasing manager index, which investors of those countries look at when making their investment decisions. I mean, even an investor in Sri Lanka, it is good that if they can be aware and educated of what is happening in global economies, mainly US, United States of America, European Union and China. So those countries have consumer confidence index and purchasing manager index, and those data, those indicators do drive the stock market, the global capital market.
The email address is IETHEVANTAGEPOINT, all in simple letters, @gmail.com. And the telephone number is 0777 534 435. 0777 534 435. Right, you have discussed at length some of the important ingredients for investors investing in the stock market. Now let's get on to another important aspect of this subject about geopolitical development. Yes, Mr. Gunawardena.
Yes, Neil, that is again an important, very significant factor that investors should be aware of, because Sri Lanka is not a completely isolated country. I mean, we are quite integrated to the world. So what is happening elsewhere globally do have an impact to Sri Lanka's economy as well as Sri Lanka's stock market. So any negative developments in the world, such as Iranian nuclear development program or North Korea's launch of missiles, and even China's stand on US interference in conflict regions such as Middle East, have a significant impact on global investor sentiment. The reason for this is mainly these developments have the potential to disrupt international trade and investments. Not only that, any negative development in the Middle Eastern region is even more catastrophic, since the region is the largest producer and supplier of oil to the world. Therefore, conflicts in that region generally tend to push up oil prices globally. So rising oil prices mean rising cost of living, rising inflation, and rising inflation mean rising interest rates, and rising interest rates mean lower consumer spending, lower investment, lower government revenue, which all affect a country's economy and the stock market. And another important factor that is affecting the performance of the stock market is the political stability in a country. That is the local political stability, not the geopolitical stability, yes. The local political stability. Mainly because the political stability in a country is critical for rapid and sustainable economic growth. When it comes to drafting, passing and implementing major policies in economically and other strategically important areas. But political stability alone will not help a country. there has to be policy stability and consistency when it comes to making and implementing nationally significant policies. To name a few: economic policies, investment policies, international trade policies, the foreign policy, energy policy, education,
all these
and
have to be
policy.
taken together.
Absolutely.
Yes.
So there has to be, what I want to say, there has to be, it's not just political stability that needs to be looked at in a country. I mean, in Sri Lanka, obviously there is political stability, the government having the majority in the parliament, and it has been there for a long time, and it has won the confidence of the people in the country. But it is not just the stability, political stability, but the policy stability and consistency. Whatever the significant policies a government makes and implement in the country should be consistent and stable.
Right, before we continue, let's have some more music and then we can continue the discussion.
Vantage Point, first of its kind investment talk show in Sri Lanka.
Yes, Mr. Gunawardhan, you're talking about stable government and stability. I mean, we have that in very good measure now.
Absolutely. It is now what people are interested at the moment is the stability of the policies and the consistency of the policies made by the government in the country. So I think the government, with this the significant people support and the confidence,
that's a very great encouragement for investors.
Absolutely, not just for investors, and it is a strong point for the country as a whole. So let's move into let's look at the other macro factor that is affecting a stock market in a country, which is the global capital market developments. The Sri Lanka, as I just said a few minutes ago, Sri Lanka is not an isolated country in the world, and it is integrated, and we cannot be decoupled from the rest of the world. And Sri Lanka's stock market is again the same. What happens in other important capital markets in the world do affect Sri Lanka. For example, if global capital markets are weakening, are falling, such as the capital markets in US, UK, EU, China, or even India for that matter, it is quite, even if Sri Lanka's economy and companies are doing well, the sustainability of growth in the stock market may be in difficulty if global markets are falling. The reason is, if the meaning of falling global markets is that investors are losing confidence in global capital markets. So in Sri Lanka also, we have about 30%. If you take daily or annual trades, Colombo Stock Exchange, about between 20 to 30% are foreign investors. So when the global markets are falling, those foreign investors in Sri Lanka also may decide to move out of the stock market, so which in turn affects Sri Lanka. So what happened if you look at globally during 2009 and 10, with the global financial crisis, all stock markets started coming down, whereas Sri Lanka stock market outperformed all the stock markets in the world, and once it became the top, the best performing market in the world.
I believe it withstood all the challenges.
Absolutely, it did because with the war ending in 2009,
yes,
the investors and general public in the country gain more confidence in investing in Sri Lanka. But with the global markets coming down continuously, Sri Lanka's market could not hold the momentum.
Mm-hmm.
As I said, basically Sri Lanka's stock market also reflected what is happening elsewhere, and it started slowing down.
It has an effect, is it?
Yeah, it definitely has an effect, because we are integrated to the rest of the world. And the other developments, now all this time we discussed the macro factors that are affecting the stock market, and let's move into the micro or smaller scale reasons that are driving up or down the stock market. So the other one is the sector developments in a country. In Sri Lanka, there are about 21 sectors representing Sri Lanka's stock market, the Colombo Stock Exchange. Of course, the largest one is the banking, finance and insurance. The largest ones are the banking, finance, insurance, telecom, hotels and travels, food and beverages, manufacturing and diversified companies, which make up over 70% of total market capitalization in the country. So the developments in the sectors the companies fall into, all these 287 companies fall into one of these sectors. So development in these sectors will also have a bearing on the stock market performance. And for example, a change in tax rates for banks will not only have an impact on the banking sector alone, but also the overall market. Because when the banking sector stocks are affected, banking sector making up a significant part of the market, it naturally affects the overall market sentiment. And of course, these sector developments can vary from government initiated ones such as regulatory changes, tax changes or industry deregulations like price floors and ceilings, and new entrants to the sector, the new companies which are entering the sectors of the country, and mergers and acquisitions in the sector. And another micro aspect which again is important is the corporate development, the developments of a company itself. So these developments are numerous, and it does affect the performance stock of a company or of a share. So if you look at these corporate developments, there are price sensitive developments and there are non-price sensitive developments. So as prudent investors, the investors need to be concerned about the price sensitive developments, which means the developments that affect the share price of a company specific developments that affect the share price of a company. But unfortunately for a layman, differentiating between the two may be a little difficult initially.
Little complex.
Yeah, initially. But with experience and listening to programs like ours will certainly equip the investors with the necessary intelligence to identify them separately.
So this is why this radio program is very, very important.
Absolutely. So the main corporate development affecting the share price of a company is the financial results, which are released every quarter and every year. So if the results of the company is above or below the market expectation, then the share price tend to move with that. And if the result is same as the market expectation, then price tend to remain at the same levels. So here understanding what the market expectation is quite important for any investor. Not just for a company, but also for an economy sector. Investors tend to form expectations about the future performance based on historical performance and trends, and with any other available information. So if the expectation of future performance does materialize as hoped by the investors, the sentiment follows suit, of course. And if it is a stock, the price of that stock will get adjusted accordingly.
Right, we'll pause there for a little bit of more music and then we will continue the last lap in this program.
Yeah.
Vantage Point, first of its kind investment talk show in Sri Lanka.
Right, before we get into the last lap of this program, I might as well give you the email address in case you want to get in touch with Mr. Gunawardena and get some more details, how he's setting about this work. Now, here's the email address for any correspondence or you want to know something more about this program. You may get in touch with Mr. Gunawardena. The email address is IETHEVANTAGEPOINT, all in simple letters, at gmail.com. And the telephone number is 0777 534 435. 0777 534 435. Right, you can summarize what we have been discussing, Mr. Gunawardena.
Yeah, let me continue with the micro developments that are affecting the stock market, specific companies. The next important one is the corporate actions taken by the companies listed, such as rights issues, bonus issues, share splits or subdivisions of shares and dividends, and also mergers and acquisitions, disposals, businesses in that company, and capacity expansions or reductions. So these are the major corporate actions or developments that affect a share price movement of a stock and then the overall stock market. If you move further, it is not just company specific developments, it is also important for investors to know about the developments in the competitor company, the peer companies. So these developments could range from what I talked about a specific company, the financial results and other corporate actions which I just mentioned. The main reason is that investors tend to analyze and judge the impact of similar developments on a competitor company and then relate it to a company under study. For example, if a competitor company releases results before another peer company, which the investor has shares, underperforming the market expectation. So if those results underperform the market expectation, which I mentioned earlier, he may be tempted to believe that the company he owns shares may also underperform the market expectation and even sell his shares in that company, because he might think because a peer company has underperformed the market expectation, before a peer company has reported results which are below the market expectation, he may feel that his company, which is also in the same industry, may also be affected. But for another investor, it may be positive. Depending on what his position is, he might buy more shares of the same company, assuming his company will either meet the market expectation or beat the market expectation. So another factor, a micro factor that is affecting the share price movement is the change of ownership. There are instances where the promoters or majority shareholders sell their holding in a company, which causes share prices to move up or down, depending on the credibility of the selling party as well as the credibility of the buying party. Because when the majority or the promoters of a company sells, there is a major buyer for that company. So if the selling party or the majority shareholders who are selling their shares has been managing the company well, and if there are doubts on the ability and credibility of the buying party, who are now going to be the new buyers, new shareholders, the major shareholders, it is quite likely the share price of that company to take a hit, and the other way around. And another factor that is affecting the performance of stocks is the foreign institutional and high net worth individual buying or selling into the stocks. If there is buying by foreigners, institutions or high net worth individuals, the price of that company naturally goes up. The main reason is all these three types of investors, when they invest big. So when they sell, as much as the share prices get affected positively when they buy, when these three types of categories of investors buy into shares, when they sell also, the same happens and the share price takes a negative turn. So and the small investors, retail investors watching these developments, and they also tend to follow these big investors, and they start making investment decisions based on how the big investors make their decisions, because what they understand, what they believe is the big investors make proper analysis and research before making investment decisions. And another important factor that is affecting the stock market, this is something very prevalent in Sri Lanka, are the rumors that is going around in the stock market. So some of these rumors are in fact true, but most of them end up as rumors only. So in a weak form market like Sri Lanka, where the prices of shares only reflect all past public available information, and prices do not immediately adjust to reflect new public information, rumors tend to play a large role than in developed countries, developed markets such as the US. So any speculation or rumors on more micro factors as discussed earlier will be the major ones, and investors need to read relevant websites, talk to their advisors and analysts to be aware of them, and take a calculated risk if they desire to make investment in specific country, specific sector, specific shares.
Well, thank you very much. We've been listening to Vantage Point with Chamikara Gunawardena, founder of Investor I Private Limited, Sri Lanka's first independent and bilingual investment research provider. Well, you have given us some very valuable hints about raising awareness of investment options and also to disseminate investment knowledge among the public. I believe there's been a big response, so you can get in touch with us. You can even call us, our producer Indira Navagama. The program was coordinated by Karunatilaka Ratnayaka, produced by Indira Navagama. This is Nihal Bharati, wishing you all the best for the rest of the day on Vantage Point with Chamikara Gunawardena.
Welcome to a brand new series, Vantage Point, first of its kind investment talk show in Sri Lanka.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
A review of global and local economic situation, capital markets and selected stocks.
Speakers Chamikara Gunawardena, founder Investor I Private Limited.
Sponsored by Investor I Private Limited. If you are looking for investing through research, don't miss your Vantage Point.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
Right here on Radio Sri Lanka.